Welcome to NTD Business. I'm Don Ma. Let's talk about the rally that the market's experiencing for several weeks now. S&P 500 has rallied 15% year to date. Options investors are buying calls, which is like bets on upside in stocks. It's at levels not seen in years. A record 1.8 million S&P 500 calls traded on Thursday. That's according to alert data. The latest gains are fueled by factors ranging from a U.S. economy that has so far avoided recession, despite the Federal Reserve's aggressive monetary policy tightening, to growing buzz over advances in artificial intelligence. Some Wall Street banks are revising forecasts for how high stocks can go. Among the latest is Goldman Sachs, whose strategists raised their year-end S&P 500 target to 4,500 from 4,000. Citing expectations that the economy is likely to avoid a downturn in the next 12 months. The index ended on Friday at 4409, up 23% from its October lows. Though some worry stocks are getting overheated, meanwhile others still see more room on the upside. Ken Mahoney, CEO of Mahoney Asset Management, has been adding to positions in Microsoft and NVIDIA in recent sessions. Massive call buying, fear of missing out, and bearish investors reversing their bets are likely to continue taking markets higher for now, he said. Mahoney says, quote, "The market is overheated, and everyone and their grandmother can see it, but it may take some time before we see a blow off top." Stocks pulled back a bit on Tuesday. Now let's talk about CBDC, or central bank digital currency. The International Monetary Fund, or IMF, is working on a platform for CBDCs. This is to enable transactions between countries. This was announced by IMF Managing Director Kristalina Georgieva. She says, quote, "CBDCs should not be fragmented national propositions. To have more efficient and fairer transactions, we need systems that connect countries. We need interoperability. For this reason, at the IMF, we are working on the concept of a global CBDC platform," she said. The IMF wants central banks to agree on a common regulatory framework for digital currencies that will allow global interoperability. Failure to agree on a common platform would create a vacuum that would be likely filled by cryptocurrencies, she says. A CBDC is a digital currency controlled by the central bank, while cryptocurrencies are always nearly decentralized. Already, 114 central banks are at some stage of CBDC exploration, with about 10 already crossing the finish line, Georgieva said. She adds that if countries develop CBDCs only for domestic development, we are underutilizing their capacity. For further analysis, here to talk with me is Thomas Hogan, Senior Research Faculty at the American Institute for Economic Research. So the International Monetary Fund wants a platform for central bank digital currencies. Now, before we get into the pros and cons, I just want you to explain to me, what does it mean exactly to have a global CBDC platform?
Yeah, that's right. It's a good question because I think this has been kind of misreported in some of the articles that I've seen online because of the lack of clarity about what we mean by platform. So sometimes when we talk about central bank digital currency, we mean the platform is the currency itself. Like, for example, if the US were to introduce a CBDC, we might call that the platform, or in Europe, if they're doing one, maybe that CBDC is the platform. But that's not really what we mean here. We mean a place where people could trade different currencies, different CBDCs. So, for example, I think we can make a distinction. If I'm an American traveling in Europe and there are some stores that maybe accept US dollars, maybe I go into a store and I say, hey, do you accept dollars or euros? That's a question of the currency itself, not a question of the platform. If they say they accept only euros, then I have to say, okay, well, do you take a Visa card, or can I transfer from my debit card where my bank is going to switch from dollars into euros? Or do I personally need to go to a bank and trade physical dollars for physical euros? That question of how to get from one currency into the other is really what they're talking about for the platform here. The IMF itself is not going to launch a central bank digital currency, just help coordinate trade of different types of currencies.
I see. Maybe you can give me a little more context, actually. The IMF Managing Director says that CBDCs should not be fragmented national propositions. Now, is that what you just explained? Can you talk a little bit about that?
Yeah, so CBDC is the central bank's digital form of their currency. So for any one country, the U.S. Is going to have a digital, or could, we don't know for sure if the U.S. is going to try to do this, but could introduce a digital form of the U.S. dollar. We've already kind of got that basically in the digital deposits that we use at our banks, and other countries have already introduced CBDC, most specifically China, where China is using it to monitor all the transactions of the individuals in China. But internationally, those currencies all still fluctuate in a international market for trading of different currencies. And so part of the difficulty will be if these countries each have their own digital format, how are those going to interact? Are you going to be able to trade from one digital currency into another? And that's the real problem that the IMF is trying to solve here, is that we're going to have a bunch of different non-compatible platforms that's based on software that's all totally different. And how are we going to be able to integrate those so that you can go from trading one digital currency to trading another? Right now, there's no way to do that. And the IMF wants to solve that problem to make these cross-country trades a little bit easier.
So what concerns comes with this, if there is any?
Yeah, so I am not concerned about the platform itself. Like I said, I don't think the IMF is really going to have a lot of control over that. And so they probably won't have much influence other than promoting CBDCs. And that's really the thing that I'm a little bit more concerned about, is that, the IMF is trying to encourage countries to use CBDCs, and they say they've had inquiries from countries that want to use that. So of the countries that are members of the IMF, so there's more than 100. They say that they've had 40 or 50 countries that have asked them, how can we create a CBDC? How do we do this? And I think that's a little bit problematic, because I'm worried about the potential for misuse of the CBDC. In the United States or a bigger country, we might not worry about the government misusing that. I mean, we should worry a little bit in the United States, but much more of a concern in China, where the government is using it to monitor all of their citizens, maybe restrict certain types of behaviors and encourage other types of behaviors. And so some of the countries where the government is playing a stronger role in the economy and in the in people's lives, then we worry a lot more about how the government is going to potentially misuse that. And so for a lot of the countries that are trying to get better capabilities, the IMF is going to potentially be equipping them with ways to monitor their citizens and control their citizens. And so I'm a little bit worried about that.
So let me just be clear. Your concern with the IMF's involvement is that they would make it easier for countries, for example, China, to develop CBDCs?
Yeah, I think China is already pretty far along in their use of CBDCs, but there are a number of other countries that are just starting to develop them. So there are more than a dozen countries that have introduced CBDCs, and largely they've been failures so far. They have really not been very valuable to citizens, and so people just don't want to use them because there's no reason to use them. If you have a private cryptocurrency, then it's providing some kind of advantages that they're trying to draw people away from using government money and instead use this private alternative. But for CBDCs, they don't really provide a lot of advantages. And so in China, for example, they're able to force their citizens to use them. And I think that's what maybe we'll see in other countries, that they want to be able to force their citizens to use them. That's where I'm a little bit more afraid of it. So, Nigeria is a country that's trying to use it for the same reason that China is, to be able to monitor their citizens and restrict transactions. And Nigeria hasn't been very successful because they don't have as much control over the population as China does. But some other countries where the government wants to be more involved with how people use their money, then yeah, I think that's a problem.
So if you could make it concise, what exactly is the biggest concern when the International Monetary Fund is involved rather than just individual governments developing it?
Right. So, the IMF is trying, or countries have asked the IMF to help provide them with better technology of how to use the CBDC. And for countries that are trying to oppress their citizens using their monetary system, this will be essentially a more effective tool for oppressing their citizens. And so that's the worry for me. We see one of the uses of private cryptocurrencies has been enabling people to get around some of their government restrictions on political speech. In a lot of countries, people that are against the political regime, the government can seize their bank accounts, their government can just essentially take their money, and private cryptocurrencies have provided a way around that. But if these governments can force people to use some kind of central bank digital currency, then they won't be able to evade those. The government will become more strict in the way it's able to restrict their citizens and control their citizens.
So you said in the US, we should still be a little bit worried about CBDC. Can you expand on that?
Yeah, so the United States is considering doing some kind of central bank digital currency. We haven't really committed to anything. The U.S. Federal Reserve, the central bank of the United States, is studying how they might implement a central bank digital currency. But so far, they are not planning to do one that would be directly offered to U.S. citizens. And so that's a really important distinction, that almost all of the countries, the plan is to have individual citizens use it just like they use regular currency. But in the United States, the Federal Reserve has said they actually don't think that they have the ability legally to do that. All they could legally do right now, as far as they're currently saying, is offer it to banks, which would then offer some kind of digital currency to the citizens, which is essentially what they do now. You know, the Fed already has a digital system for coordinating bank payments and having banks deposit money at the Fed, making payments with the Fed. And so having a central bank digital currency that's only offered to the banking system really wouldn't be much different than we have now. But there is some possibility that they might change their policy, or that Congress might authorize them to offer a central bank digital currency directly to the public. And if that happens, then that'll be a lot different, and I think we'll need to worry about it a little bit more.
So in that scenario, what's the worry?
Well, again, doing something like China, that the Federal Reserve might try to control what people are allowed to spend money on, and might monitor. I mean, they could monitor every transaction that you ever make. Everything that you ever spend money on, the government would know about it. And so that's a bit of a problem, because we've seen the Federal Reserve and other financial regulators use their power politically. For example, they can restrict banks from lending to certain industries. And there was a problem in the Obama administration called Operation Choke Point, where the bank regulators had been intentionally telling banks not to lend to politically unpopular industries, not to lend to payday lenders or tobacco companies or fossil fuel companies, right? Anything that they don't want, that they don't like that industry for some reason, even if they're not doing anything illegal, even if the banks and the industry are not doing anything wrong, they can pressure these banks not to lend to politically unpopular industries. And so that's what we're afraid of, is that they would start using this as a way to control people, tell you what you are allowed to spend money on, what you're not allowed to spend money on, and potentially, you know, monitor every transaction that you ever make. I personally think that's a problem.
So on the point that they could monitor everything, all of your purchases, I've heard this argument that, I mean, right now, do people even use cash? How many people use cash anymore? How many people have cash in their wallets? A lot of people, especially the younger generation, simply carries a credit card. I mean, how would that be any different? That's the argument.
Yeah, so that's true that most people are using digital money today. I mean, I personally barely ever carry cash. It's actually, the use of cash is actually still pretty prominent in the United States, even though it seems to us, it seems to me at least, like I almost always use digital money. But I'm using money, I'm making payments with my bank card or with a credit card, some kind of digital format. And if the government, first of all, if they want information about that, they have to have a warrant. They have to have a reason to believe that I've committed a crime in order to go to my bank or go to my credit card company in order to get that information. But second of all, they don't really have the ability to restrict me from spending money on things that I want. Whereas if they controlled the money, if all of that was being done through the Federal Reserve, they could monitor all of my transactions without any need for a warrant, without any need for further authority, and they could prevent me from spending on certain things that, again, anything that was politically unpopular, they wouldn't need a law. They could just go ahead and restrict you from being able to spend money on those things. And so I think that's a little bit worrisome. They would also, the argument that the central banks make that would be in favor of this is that, well, then they could change the money supply a little bit easier by crediting money to people's bank accounts. If they wanted to put money into the economy, they could just deposit some new money into your account. However, that has the problem that if they wanted to take money out of the economy, they could just take money out of people's bank accounts. So that seems like a bit of a dangerous precedent. Even if we thought it would make monetary policy more effective, it seems like something that we don't want the government doing, is being able to just take money out of our bank accounts or telling us where we can or cannot spend our money.
So I guess the question is, does the pros outweigh the cons?
Yeah, so kind of. There are a lot of different questions about how involved do we want the government to be in our life, right? Do we want them monitoring everything that we do and telling us what we can and cannot do? I think that that's a pretty bad precedent that we shouldn't want the government to be involved with, because we've seen in the past that they tend to abuse that authority. Again, with the example of just pressuring politically unpopular industries. We don't want whoever is in the president's chair to be able to tell people what they can and cannot spend money on. I think that's pretty dangerous and probably, it's probably illegal, basically, the way that the law stands right now. And so allowing our government to do that, or allowing, back to the IMF, them to give other governments the technology, other governments that are even less responsible than the US government and more oppressive, do we really want them giving those governments the capability to monitor and control those citizens? I would say probably not.
So earlier you said that it's not currently legal for the Fed to push CBDC onto the entire American population, but if the rest of the world does that, and the U.S. is the only country left, would the U.S. be able to hold out?
Maybe. So the United States right now has a pretty dominant position in the international foreign exchange, but that's a very different question than what we do domestically, right? And so internationally, I think it would be fine for us to have a digital currency that is, if other people from other countries, or especially governments from other countries, want to trade US dollars, then we could have a system for that. And basically, we do have a system for that already. So having a digital dollar for that kind of thing, I think, wouldn't be any different. Domestically, it's really just a question of the mechanism that we're using to manage the money supply. I think the Federal Reserve doesn't need to be, and really doesn't want to be, involved with retail payments. If they were to offer a digital currency directly to individuals and let any American sign up and have an account with the Fed, that puts them in a difficult position of having to support all these retail traders. The Fed doesn't want to have like a 1-800 number that people have to call, and they have a huge support team of people that are having technical problems with their CBDC and things like that. That's a lot better left to private companies that are able to respond to demand and satisfy their customers. Governments are not very good at that kind of stuff. And so I think from the government's perspective, unless they really had some strong reason to want to control their citizens, like the way China does and the way some dictatorial nations do, I don't think they really want to be involved with this. Even from their perspective, it's probably more hassle than it's worth. And from the citizens' perspective, again, I think it's probably something that we don't want the government involved with.
All right, just a final question. Are CBDCs inevitable, do you think?
I'm sorry, are they what?
Are they inevitable?
I don't think that they're inevitable. I think that the dollars that we have already are already digital and serve most of the purpose that the Federal Reserve wants them to serve. I think the Federal Reserve doesn't want to offer a CBDC directly to the public. At least the current administration, I don't think, really values that very much. And again, they say they don't believe that they have the authority to do that right now. So right now they're focused on whether they will have a CBDC that is only used by the banking industry. And that has a little bit of advantage in terms of the CBDCs are a little bit better technology than the technology that the Federal Reserve is using. but it's not really fundamentally different. It doesn't really provide any other advantages that they're not getting right now. It makes it a little bit more efficient, but not anything that's really special. And so, I think maybe the Fed will end up introducing something new like that. They just started a new interbank trading platform called Fed Now. So, do they really want to go through the hassle of developing whole new technology after they just came out with this recent one? I don't know, maybe. But it doesn't seem to me that is inevitable. And even if it is, I think it'll just be something, at least right now, we're expecting it'll just be something for the banking system, not necessarily a retail one for individual citizens like we're seeing in other countries.
All right. Thank you so much. Pleasure speaking to you today.
Yeah, thanks. Glad to be on.